Hello listeners, welcome back to Money Talk with Patrick. I am your host Patrick, trading mentor and creator of TC Trading. In today's episode, I will be grabbing this idea of active versus passive income and translate it into trading. I will be covering the different types of trading as well as some subtle differences between position trading and investing. If you're interested in learning how to trade, be sure to check out my webpage at www.tctrading.com. So hello everyone, once again, I hope that you are having a very good Thursday if you're listening when this podcast is actually out. So if you remember on the last episode, I was talking a little bit about active versus passive income. And this is something important that you have to consider with your financials and how, overall think, how am I getting money? How am I getting this income? Am I working more than I should? Can I kind of translate some of this active income into passive? So potentially that made you think a little bit about what other opportunities could lie ahead. Now, you know that in this podcast, I've talked a lot about trading. This is also why TC Trading kind of like was founded, just to help more people who really want to learn about trading, learn it in a way that's basically honest. That is, it's not a lie like all the marketing that you have all around. So I wanted to talk more about trading as active and also as passive income, because in the last episode I kind of hinted that it would be more of a passive income, but I really need to go deeper into this because it's not as easy as saying, hey, this is passive or hey, this is active, because it really depends on your personal taste for risk and your personal taste or how patient you are. Now, just to start off, I'm gonna kind of like grab a quick summary of what I've said before of active versus passive income. So we already know that active income refers to that income received for performing a service, right? So it basically requires material participation. So if you are earning money because you are doing something, and if you stop doing that, then you're not earning money, then you know that's active income. Now, on the other hand, we have passive income. That is the income that requires almost no effort to earn and maintain. And we talked about the nuance of no effort because it's not really true. So a better definition is the passive income that requires a substantial initial effort with potential for a long-term payout. Now, when thinking about trading, where do you think trading really lies in? And the thing here is that it really depends on your trading lifestyle. And something that I've said in my course and something that I've said to all my students is that you have to grab trading and basically accommodate it to what your lifestyle is. You cannot force your life into a specific type of trading. It's the other way around. You grab trading, you grab this opportunity of making a secondary income, and then you try to adapt it to whatever your daily routine is. So let's start off with trading as an active income, okay? So this, of course, is the idea that if you do not trade, you do not get income. That sounds pretty straightforward, and you might think that all types of trading might be active income, but it's not kind of necessarily true. Now I will explain. First things first, let's talk more about trading as active income. So you have two main types of active trading. You have day trading on one hand, and on the other hand, you have swing trading. So if we start talking a little bit more about day trading, you know that you open and close positions during the same day. So your trades usually will take perhaps a couple of minutes or maybe a couple of hours, but the main idea is that day trading, you open the trade in one day and you are closing it on the same day. Now, what this means is that usually you would trade for some hours per day, right? You would say, okay, I'm going to trade for 2 hours. I'm going to trade for 3 hours, for 4 hours. It could be similar to a part-time job, or it could be similar to a full-time job. Some people try to do that. They just trade for 8 hours, or they do their analysis and trading and all, what's surrounding this type of work, and they make it so that it's a full-time job. Now, swing trading, it's still active income, but it's less active than day trading. Why? Because trades usually take more than a day up until couple of weeks. You might, again, this really depends on your strategy, this really depends on your trading style, but usually you are not really gonna be very active, or at least as active, when you are swing trading. The reason is because you can always set up pending orders and wait for the price to react. You can put a limit buy or a limit sell, and when the price touches that specific level, then your trade is gonna be triggered. So you don't really have to observe and just wait for the right opportunity. You can always do your analysis and you can just set your trades accordingly. Now, this does not require your full time, but it does require management, because once your trade is open, you also want to watch where the price is going so that you can move your stop loss. You can maybe take profits before if something is highlighted. Of course, you can use the assistance of different alerts. If you're using TradingView, you can set an alert if the price reaches, I don't know, in terms of profit 1x, maybe you can move your stop loss to break even. So, it's still active income, because of course, if you're not doing anything, you are not really profiting, because you have to manage your trade. But in any case, it's a little more passive than what day trading is. Now, let's talk about trading as passive income, because this is where things become a little bit more interesting, at least for a lot of people. Now, it is possible to trade without leverage for longer periods of time. Now, if you know, leverage is when you are basically borrowing money from the broker, thus you can actually have positions that are bigger than your account size. Of course, it's more profitable, but also it can be more risky. So if you are kind of like trying to trade without leverage, which is possible, you might be doing this kind of like most passive way of trading, which is position trading. Now, position trading usually means that you hold a position or add to it depending on the price. So you can trade all the way between several days, several weeks, or even several months. So this is more like long term, okay? But the thing here is that your intent from the very beginning is always to sell for a profit, right? You want to sell for a profit at a later point in time. Now, usually you will not use leverage, or at the very least, very, very low leverage. And the reason is because if you're using a lot of leverage, then if the price goes against you, then you will be wiped out, right? So you don't want that. That's one of the reasons why you wouldn't usually use leverage while doing position trading. Now, one thing that a lot of people do is that they can dollar cost average down at better prices and dollar cost average out of the position as the price goes into your favor. So for instance, if you are doing position trading in any particular stock, if it goes down, I don't know, 10, 20, 30%, maybe you would be interested in actually buying more, because you think that your entry point is a strong entry point and you think that over time, it's gonna be more profitable. Now, I know what you might be thinking about this, and you might say, hey, but then what's the difference between position trading and investing? Now, investing is when you buy an asset without the intention of selling it in at least 5 years, okay? You are looking at a real longer term. Now, this is usually better suited for indices or diversified portfolios of stock or assets. This is really when you want to go into, manage accounts into all different, ETFs where they are already diversified and where someone is kind of like managing what's happening with that specific account. Now, the reason here, again, is that you don't have the intention of selling it. Whether in position trading, from the very beginning, you already know that you want to sell in a couple months or whatever it takes to take a profit. Again, usually for investing, you will not buy depending on the price. This is another big difference. And the reason is because you will try to aim to make a monthly purchase, let's say, regardless of the price, and expect the price to go up within time. So you might be saying, like, if I earn X amount of money per month, maybe I'm gonna put 20-30%, whichever you want, into investing, and you are gonna buy independently of the price. If the price is up, you don't care. If the price is down, you don't care, because in the long-term future you expect everything to go up. Here is where this question comes up: which one should you go for? And the reality is that, as I said before, this all depends on your risk appetite and also on your lifestyle. Some people like to spend time making more money. They are kind of like more keen into learning how the market works, how they can invest. There's a lot of reasons why you want to learn how to make more money, but also there's other people that they don't like the risk that's involved, and they prefer to do something that's kind of like more risk averse. They don't really want to just buy a stock and then see that it's under 30% or 30% to the downside. Now, in terms of risk, in a spectrum, if you were to order everything in a spectrum, the more risky, of course, and the more time consuming is day trading. And then it will be swing trading, there will be position trading, and of course the most kind of like risk averse and less consuming in time is investing. In any case, traders and listeners, I hope that you enjoyed this episode of Money Talk with Patrick. Understanding the different types of trading and how to best use them might be key for you to grow your wealth and be more diversified. Remember that you don't have to stick to a single style, find the one that suits you the best. If you have been curious on how to trade cryptocurrencies, forex, or stocks, head to my webpage at www.tctrading.com to start learning. Thank you very much for listening, and I will see you in the next episode. Take care.